South Korea will spend nearly half of its annual budget in the January to March quarter to help cushion the effects of slowing global demand. The 44% allocation is the most in a decade and will be aimed at low-income earners and reactivating the economy. Recent poll data shows rising anger at the government of Lee Myung-bak over jobs and the rising wealth gap. This party faces two crucial elections this year. 70% of the budget will also be spent by the first half of the year, reflecting the widespread view that the global economy will improve in the second half of 2012. Recent indicators suggest Asia's fourth largest economy slowed considerably in the final quarter of 2011, with factory activity shrinking the most in nearly 3 years in December. The South Korean economy will likely face even more troubles early this year as the Eurozone's fiscal crisis dampens demand for exports. Seoul has cut its 2012 growth forecast from 4.5% to 3.7%, but some analysts say growth could slide below 3% as exports run out of steam. Samsung Securities' Victor Schwed says Europe is heading for recession, while the recent uptick in the U.S. economy may not be sustainable.
A lot of that is due to much higher than expected personal consumption. We're actually saying that that's probably not going to be sustainable as we progress through 2012. In terms of Eurozone, there is no question that Eurozone is going to go into recession as we go through 2012. The only question is the degree to which the industrial output as well as economic growth rates in Eurozone suffers, which in turn will be dependent very much what ECB does.
Despite the slowing economy, high inflation continues to dog the economy. With the Bank of Korea most likely keeping interest rates on hold for now, fiscal policy may be the most important tool to keep the economy on track. Arnold Gay, Reuters.